Greetings, everybody. Welcome to Liberty Call. Today is Thursday, May 11th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Pretty gloomy here in Colorado. It has been raining for about 24 straight hours. And good thing the ground doesn't hold on to water very well, because we would have some sogginess out here. But looks like most of it's running away. But you didn't come here to hear about the weather forecast in Larkspur, Colorado, did you? No, you came here for some excellent financial news, and I'm glad you're here. If it's your first time watching, please give me some thumbs up, likes, shares, subscribes, and follows. I'd greatly appreciate it. Lots of red on the markets, across the markets today. And I think it was the Disney news came out yesterday. That wasn't real good. I know they were down a bunch today. And, and the jobs numbers, it's kind of a good news, bad news. I mean, they're higher than what we would want, but then that gives the people who want the Fed to stop raising rates some ammunition to stop doing that. So it's like, it's good or bad. I don't know. All right, let's go ahead and jump into the numbers. Dow Jones was down 0.66% today, 221 points, closed 33,309. S&P 500 was down 0.17%, closed at 4130. NASDAQ was up 0.18%, closed at 12,328. The VIX was flat today, down 0.06, currently holding at 1693. Canada was down 0.4%. Brazil was up 0.75%, and Mexico was down 0.85%. Over in Europe, Germany was down 0.39, UK was down 0.14, France was up 0.28, Netherlands was up 0.38%, Spain up 0.16%, Italy down 0.61%, Switzerland up 0.66%, and Portugal down 0.74%. So, I mean, these European markets are just all over the place. Both Russian exchanges in the green, the MOEX up 1.82%, RTSI up 1.15%. And the overnights in Asia, the Nikkei was flat, up 0.02%. Australia was down 0.05%. New Zealand down 0.65%. The Shanghai in China was down 0.29%. The Shenzhen component up 0.02%. China A50 down 0.12%. DJ Shanghai down 0.23%. Hang Seng down 0.09%. And the Taiwan weighted down 0.81% for the day. All right. So again, kind of a meh day in the markets. I think people are kind of coming to the realization that things aren't getting any better anytime soon, but that's just my own take on things. All right, let's go to today's market recap. S&P 500 stumbles as regional bank stampede, Disney slump way. All righty. On Thursday, the S&P 500 fell, with regional banks and Disney being the main sources of pressure. The continuing turmoil in regional banks, particularly PacWest Bancorp, which reported a 20% slump in deposits, fell 9.5%, kept concerns about a deeper bank run at the forefront. Falling Treasury yields were supporting growth stocks, particularly tech, with Alphabet leading the climb in big tech for the second day running. Microsoft's early investment in ChatGPT gave it a head start on the AI front, while Google's recent announcement that it would incorporate generative artificial intelligence into its products drew positive remarks from Wall Street. The producer price index for April rose 0.2%, slower than economists had expected, and slowed to 3.2% on an annualized basis from 3.4% in March. Weekly initial jobless claims rose by 22,000 to 264,000 for the week ending May 5th, the highest since April 23rd. Jeffrey said in a note that if next week's jobless claims are similar to this week's, they would be 18,000 higher than the previous survey week, implying slower payroll growth and lower household employment. Despite the data showing further signs of easing, inflation and a pickup in jobless claims supported bets on the Fed pause and the potential rate cuts later this year. They've been talking about this over and over again. They've just been hoping and praying, please cut rates, please. We like easy money. All right. Walt Disney dominated the earnings front, falling 8% after the entertainment company reported an unexpected decline in Disney Plus subscribers amid quarterly results that showed inline earnings and better than expected revenue. Deutsche Bank said it would buy the dip in Disney on expectations that cost-cutting, streaming ad growth, and the company's strength in direct-to-consumer pricing would support longer-term profitability. Beyond Meat fell over 17% as the announcement that the company plans to sell up to $200 million of its common stock overshadowed its better-than-feared quarterly results. Robinhood Markets, Inc. rose 5% after reporting first quarter results that topped Wall Street estimates, driven by better securities lending-related revenues. Goldman Sachs said, though, it remained neutral on the stock. Goldman Sachs added that it would look for signs of growth in more reoccurring and less cyclical revenue streams to become more positive on the stock. All right. So Disney's not doing great, and regional banks. I mean, I think everybody's worried that the banking system's going to just collapse, and the tinfoil hat people are saying, well, this is the Alex Jones guys are like, they're doing it on purpose. They're trying to get all the banks to fail and all the big banks to buy them up so they can put you in the CBDC. Now, I'm not saying that that's not the truth. I'm just I put on my a crazy hat there for a second. All right, next up. Producer prices increased moderately in April. The U.S. PPI rose modestly in April, leading to the smallest annual increase in producer inflation over 2 years, further suggesting that inflation pressures were easing. The producer price index for final demand increased 0.2% last month, with costs of services accounting for 80% of the monthly PPI rise. Services were boosted by a 4.1% rise in portfolio management fees. There were also increases in the costs of food and alcohol, wholesaling, outpatient care, loan services, hospital inpatient care, hotel, and motel rooms. However, the cost of long-distance motor carrying fell, as did food retailing and securities brokerage, dealing, and investment advice. Services prices fell 0.1% in March, but in April, they increased 0.3%. In the 12 months through April, the PPI increased 2.3%, down from 2.7% advance seen in March. The annual PPI rate is slowing as last year's large increases fall off the calculation. Excluding the volatile food and energy components, core goods prices rose 0.2% after a similar gain in March. In the 12 months through April, the core PPI rose 3.4% after increasing 3.7% in March. Economists polled by Reuters had forecast the PPI climbing 0.3% from the prior month and rising to 2.4% on the year. On Wednesday, the U.S. government reported that the annual increase in consumer prices slowed to 5% in April for the first time in 2 years. The Fed had raised its benchmark overnight rate by 500 basis points to 5 to 5.25 range since March of last year, and last week signaled it could pause its fastest monetary policy tightening campaign since the 1980s. Excluding food and energy and trade service components, producer prices gained 0.2% in April after edging up 0.1% in March. The slower producer and consumer price increases will support bets on a Fed pause and potential rate cuts later this year as fears of runaway inflation ease. But then we got to deal with a recession. So I don't know if the next thing on the docket is better news. The U.S. stock market has been closely monitoring the inflation data as investors worry about the impact of rising prices on corporate profits and stock valuations. The data has been mixed, but overall, the recent report suggests that inflationary pressures are subsiding, which will ease the Fed's concerns and could help support the stock market. We shall see. Again, most of these idiots in Washington who kind of run everything, they're usually wrong. So we'll see. But they haven't heard much about the soft landing in a while. Remember the soft landing? Woo! I call it more of a crash. But anyways. All right, last up on the news docket, U.S. weekly jobless claims hit a 1.5-year high and inflation subsiding. This is a short one. The number of U.S. workers filing unemployment claims, unemployment benefits has increased by 22,000 to 264,000, marking the highest reading since October of 21. The 4-week moving average of claims has risen 6,000 to 245,250, the highest level since November of 21 also, suggesting that the trend in unemployment employment may be deteriorating. An upward trend could be the result of cumulative and lagged efforts of the Federal Reserve's rate hikes in the economy, which may lead to layoffs as companies prepare for a weaker demand. With demand cooling, inflation pressures are subsiding, with the producer price index for final demand rebounding 0.2% in April, while the annual increase in wholesale inflation was the smallest in over 2 years. Despite this, the labor market remains tight with 1.6 job openings for every unemployed person in March, well above the 1 to 1.2 range, consistent with a jobs market that is not generating too much inflation. All right. Well, that was everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope everyone has a wonderful evening, and I'll talk to you next time. Adios.